Hi everyone! I often get the question how to make a deposit acceleration or overclocking on options. To avoid answering this question every time, I will make a video to explain in detail a few simple rules on how to use options to increase your trading deposit. First of all, I will note that options are high-risk instruments. They do allow you to increase your trading deposit. However, the risk is limited and you will not get some kind of liquidation or margin call if you make such purchases to increase your deposit. So, a few simple rules to follow. First, no selling to increase your deposit. Selling options is suitable for providing some profitability, creating trading capital associated with risks. But these profits are not high, so such strategies are not suitable for deposit increase, e.g. selling options, selling volatility, all this is not suitable. Only buying will do. And in this video, I will look at the simplest options, show you which strikes to choose and how to use such strategies. Second rule, short time of expiration only. You do not need any long time frames before options expiration. Only take the shortest series that are available. In this video, I will be looking at cryptocurrency options because cryptocurrencies are highly volatile trading instruments. Cryptocurrencies allow to create strategies that show high profits. Let's start with well-known Bitcoin. Right here I have Bitcoin futures. We choose the shortest series. Now there are quarterly series, monthly series available, but we choose the shortest, weekly series. Simple arithmetic. In order to increase our deposit from $100 to $10,000, we need to make two very successful trades. For example, we choose some options that should go up 10 times in price. Our first step is to buy $100 worth of options. The options go up 10 times, we lock in the profit, we get $1,000. Our second stage is to buy options worth of $1,000. The options become 10 times more expensive, we fix the profit and get $10,000. First, we need to see this sharp upward movement of Bitcoin, and then we need to understand what options to choose. We are interested in weekly options with close expiration. Pay attention to call options at strike 18. Their theoretical price is close to $51. Accordingly, call options at strike 17 have a theoretical price of $491, almost 10 times more expensive than call options at strike 18. This means that if we buy $100 worth of 18th call options and the basic asset of the Bitcoin future rises in price by $1,000, then at the moment in time, 18th strike options will be worth the same as the 17th strike options. There will be a 10th-fold increase in price, and that's what we need. Rule number 3. Choose only cheap options, those that can aggressively rise in price. If we buy 2,000 of these options for $100, what do we get? Give me a second. Look at the chart. If the price goes up by almost $1,000, we get $1,000 in profit, specifically $900. So we need to seize the moment, buy cheap options. We need to follow the news of the economy in case something will happen with FRS, with unemployment, positive or negative events. In case of negative events, we can turn to put options, play the downside, just in case bad news is expected or has already had an effect. The major cryptocurrency exchanges are constantly experiencing some sort of liquidation, and then we can see icicles stretching downward. This can be used to lock in our profits. For example, let's buy put options at strike 17. So, what quantity we will need for $100? Note, on the AE exchange with futures and options, 1 Bitcoin equals 1,000 contracts. So, we need to buy 1,250 put options. We will get the following. If the price moves down, the leverage will be a little less. To earn 1,000, we need the price movement to 16,100. So the price of Bitcoin must fall by $1,300 in the time before the expiration. You can also consider other financial instruments, such as Ether. There is high volatility, so the options have more aggressive price movements. Let's see what can go up in price. Let's choose the shortest weekly options, for example at 16. They can rise in price, even if not by 10 times, but by 9. But for this to happen, the price must pass the distance of $150. How many options should we buy? If my calculations are correct, somewhere around 600. So 600 options to call 1,350. The chart opens, it shows how many options we bought. In case the price rises to 1,500 by $150, we get $1,000. In such situation, it is better to work with put options. When the price tends to go down, then we should buy put options and wait for liquidation. As soon as you have bought these options, you should immediately, either with the help of a robot or by yourself, sell the options at a given price. You don't have to even think. You can use even more highly volatile options, such as Matic or Dogecoin. Dogecoin reacts perfectly to Elon Musk's Twitter. We wait for a certain tweeter and use it to decide which options to buy. Let's take a look at the options here. An option with a strike of 95 costs $1. Accordingly, $10 is an option with a strike of 70. This is not a good option. The best option is to use a vertical spread. You can learn about it from my other videos if you are interested in the topic of deposit overclocking. Leave your likes and then I will make one more video on deposit acceleration with vertical spreads. This is even more profitable and interesting strategy. I will pay more attention to the math of vertical option spread, but for now I would like to finish the video. I wish you a successful acceleration of your deposit. Options allow you to do this with limited risk and high leverage. Consider a 10-fold increase in price, and after entering a position, place either a robot or sell orders yourself to lock in a profit. So again, leave likes. I wish you successful trading. I wish you all the best.